Hormel Foods Corporation, NYSE, HRL, a global branded food company, released its second quarter fiscal 2023 results, and these are the highlights. Net sales amounted to $3.0 billion, reflecting a year-over-year decline. Operating income reached $296 million, with an operating margin of 9.9%. Earnings before income taxes stood at $279 million, with an effective tax rate of 22.1%. Diluted net earnings per share were 40 cents. Cash flow from operations reached $208 million. Jim Snee, Chairman of the Board, President, and CEO, expressed satisfaction with the results and highlighted the company's ability to meet its commitments and drive growth. He mentioned progress in addressing inventory levels, stabilizing the Planters snack nuts business, and implementing the go-forward operating model. Snee also noted the significant improvement in fill rates and acknowledged the strategic investments made in the business. Segment performance. Retail. The retail segment experienced a decline in volume and net sales, primarily due to lower turkey availability. However, various brands, including Hormel Chili, Skippy, Hormel Pepperoni, and Hormel Black Label Bacon, demonstrated net sales growth. Pricing actions and the strength of leading brands helped offset the impact of unfavorable mix and higher operating costs. Food service. Although volume and net sales declined slightly, the food service segment showed growth in sliced meats, pizza toppings, and premium breakfast sausage categories. The impact of lower turkey volumes and net pricing in certain categories, such as bacon, was mitigated by brand performance and improved product mix. International, volume and net sales declined, primarily due to lower commodity turkey export sales and weaker results in China. However, the Skippy and Planters brands, along with strong growth in Brazil, partially offset the decrease. Food service sales in China showed improvement compared to the previous quarter. Outlook. Hormel Foods Corp expects sales and earnings growth in the second half of the year. Anticipated growth drivers include the food service segment, an inflection point in the international segment, higher turkey volumes, improved fill rates, and progress in implementing the go-forward operating model. The company remains confident in its growth outlook and is focused on cost reduction initiatives to improve its margin structure. Strategic priorities. The company emphasized protecting and growing core brands, amplifying scale in snacking and entertaining, enhancing the growth of ethnic and food-forward portfolios, expanding leadership in food service, and aggressively developing its global presence. Progress has been made in these areas, including volume and sales growth, product launches, market expansion, and initiatives to transform the company. Selected financial details. Advertising spend for the quarter was $35 million, with an expected increase for the full year compared to the prior year. The effective tax rate for fiscal 2023 is expected to range between 21.0% and 23.0%. Capital expenditures totaled $54 million for the quarter, with a target of $280 million for the fiscal year. Depreciation and amortization expense was $71 million for the quarter and is projected to be approximately $285 million for the full year. Share repurchases amounted to $12 million during the quarter. Hormel Foods Corp reaffirmed its sales and earnings guidance ranges for the full fiscal year, expecting net sales growth of 1% to 3% and diluted net earnings per share between $1.70 and $1.82.